So today, GRUBHUB dropped 43%. I own 100 shares of GRUBHUB at $74.45. Today it's trading at 33.11. I'm down $4,134 US, or 55%. What should I do? So first of all, why did I buy this stock? Obviously, it was a mistake. But the reason I bought it is mostly because my strategy is writing covered calls. So buying stocks, so buying 100 shares of the stock and selling call options against it, collecting 3% per month sometimes. And at the time of purchase, the premiums on GRUBHUB were very interesting. So that's part of the reason I bought it. Also, it's got a strong brand in the States. And if I look back a year, I see that it was trading at 144, and then when it was trading in the 70s, I felt like, okay, it's relatively low compared to its highest price. And since I'm gonna sell call options on it anyways, reducing my cost basis, I wasn't too worried if it dropped. But obviously, I didn't think it would drop this much, 43%. I assumed that it would trade inside a certain range for a while, if not go up. So now what do I do with this? Do I sell it before it goes even lower? Do I keep it with hopes that it's gonna come back up one day? Is this considered dead money if I just keep it? Can I do something with it? Am I better off selling it and using the capital towards something else? But if I do that, if I sell it and use it towards something else, that's something else that I'm gonna invest in. Can I really recover the $4,000 loss? So remember I said that I bought the stock to sell call options against. So let's see how many call premiums or how much call premiums I collected from GRUBHUB. Now on the trading platform, Questrade limits me to 3 months, but I know I've had it more than 3 months. So I'm gonna go to the account management platform. I'm gonna go to account activity, I'm gonna export to Excel, and I'm gonna filter on GRUBHUB calls. So as you can see, I've collected about $1,115 in call premiums since I owned GRUBHUB. So I could have just bought GRUBHUB at 74.45 and just kept it, done nothing with it. It doesn't pay any dividends, so I could have just kept it, waiting for the stock to go up to eventually sell it and make a profit. Now, if I had done that, if I had gone into GRUBHUB with that intention, I would be right now down $4,134. But instead, I went in with the intention of selling call premiums immediately. Even if I lose my shares at the strike price that I choose, I don't care. I collected a premium and I got my money back. I got my capital back. I can use it towards something else. So I'm not going to go exactly into the details on how covered calls work. You can watch my other videos on covered calls. But basically, when I sell a call option at a particular strike with a particular expiration date, if the stock is trading above that strike price at expiration, I'm forced to sell the shares at that strike price. If I don't want to sell my shares at that strike price, I can buy back the call option and maybe sell another one, either at the same strike or at a higher strike. So my plan was to let the shares go if that happens, but I'll come out on top with the premiums collected from selling the call options. So because I've been selling covered calls on this, instead of being down $4,134, I'm actually down $4,134 minus $1,115 that I collected from selling the call premiums. So I'm actually only down $3,000, just $3,000 US. So here's the plan. Here's what I'm going to do with this position right now. I'm not going to sell it for a loss because I'd be down $3,000. What I'm going to do is continue to sell call options. But of course, when I initially got into this trade, the strike I was choosing to sell call options at was basically $70, basically the price that I was willing to let my shares go. But now that the stock is trading at $33, there's no premiums at a 70 strike. If you look at November 15 expiration, you can see that the 70 strike has nothing. You could only collect a penny per contract, a penny per share. $65 will get you about $4. $64 will get you $5. And there's actually no bid. No one's actually willing to buy that call option. So if no one's willing to buy it, you can't sell it. So I'm going to have to go into a lower strike, a strike that's closer to the current market price. But the risk of that is if GRUBHUB rallies at some point from 33 to, let's say, above $40, then I'm forced to let my shares go at 40. Yet my cost on the stock is around $70. So if that happens, I'd have to buy back the call option that I sold. Most likely this will cost me. So the plan with this stock is to continue selling call options on GRUBHUB. Right now the stock is trading at 33. What I ended up doing today is selling a call option at a 40 strike. As you could see here, collected $52. And I'm already making profit on that call option that I sold because it's right now worth $30 about. So that $52 that I collected today, I could buy it back for $30 and I'd confirm a $25 profit. But I'm not going to do that. I'm going to wait till expiration or wait until it's completely worthless and then roll over the call option to the following month and adjust my strike price depending on where GRUBHUB is trading at. If GRUBHUB keeps going down, let's say below 30, then I'm most likely going to have to pick a 35 strike to sell a call option at to get some decent premiums. If GRUBHUB is moving up to 40, 45, then I'll have to adjust my strike price. I'll have to sell a call option at a higher strike price. But hopefully that doesn't happen while I'm currently in the position of a covered call option. Ideally, by November 15, I want GRUBHUB to be trading below 40 so I don't have to buy back the call option for a loss. My option expires worthless and then the next month I can sell another call option either at the same strike or at 45 or wherever GRUBHUB is trading at. So basically, while I'm waiting and hoping that GRUBHUB comes back up eventually to $70, I'm going to try to collect some sort of income from GRUBHUB. I'm going to try to make it generate money for me while it's down so much by selling call options at a lower strike. So like I said, today it's trading at 33. The strike that I chose for November 15 is 40. So I have about 2 or 3 weeks for GRUBHUB to stay below 40 and this trade will be a winner for me. The call option only, not the whole stock, not the shares part. The shares part will still be down, but I'm actually reducing that loss by the premiums that I'm collecting. So today we can add about $50 to this amount here. To this total here, we can add $50. So $1,165. So as you can see, it might take a while before I actually recover the loss of $4,000, but it's better than doing nothing and it's better than selling the stock for a loss. Now, the real mistake happened when I bought the stock initially. I should not have gone for a brand new stock. I should have gone for quality stocks like Microsoft, Apple, Facebook, bigger name stocks that even if they drop, you know that in the long run, they're going to go back up. They have a track record of consistent growth and innovation. A stock like Visa and MasterCard would have been perfect. MasterCard is always going up. I mean, look at MasterCard for the past year, from 175 to 274. Past 5 years, from 86 to 274. It's just going up like a straight arrow. And it's got some decent call premiums. Not as great as GRUBHUB when I initially bought it, but at least I would never be down on the stock like I am on GRUBHUB. So the mistake happened initially when I purchased the stock is I should not have purchased it. I should have bought some quality stocks instead. And I'm even considering just sticking to ETFs like I am with the Qs here, buying 100 shares of the Qs and selling call options against it every week. So if you really want to learn about covered calls, you could watch my videos. I've got a playlist on covered calls, but where I learned about covered calls is mostly from Alan Ellman, so you can find his videos on YouTube. He's got a bunch of videos explaining covered calls, and that's actually why I got started, is after watching his videos. Alright, so if you have any questions, leave them in the comment section below. Let me know if you think I should keep the stock or sell it. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.